With Tesla's recent 3-for-1 stock split, investors and stock experts have differing expectations. Some people think Tesla's stock is overpriced, while others have high hopes for the EV company's stock performance in the future. Greetings to all, and thanks for returning to Everything Tesla Stock. In the course of manufacturing and distributing EVs throughout its markets over the last few months, Tesla has seen both notable successes and setbacks. Nonetheless, an effective strategy for raising income and minimizing expenses and obligations must be in place for a business to succeed. Given Tesla's historical performance, it is reasonable to believe that the company's stock price could fall sharply as a result of things like growing inflation and the incapacity to complete projects on time. However, there's a good probability the company's stock will perform well in the upcoming months. But given the challenging market conditions, is it realistic to anticipate the stock to rise? That's about to change. Before we begin, though, please remember to hit the like, subscribe, and turn on notifications buttons if you enjoy watching videos of this kind in order to be updated on all things Tesla. Tesla has been in the headlines a lot these past several months, being a big player in the EV market. It is predicted that EV sales in the US and many other markets across the world have increased by roughly 105% annually. In addition, a number of stock analysts have increased their target prices for the stock in the wake of the 3-for-1 split. Dan Ives, a Wedbush analyst, revised his price estimate for Tesla stock from $1,000 to $306 after the stock split, citing the company's anticipated manufacturing ramp-up in Shanghai. Gary Black, the creator of Future Fund, likewise set a $500 price target for the stock. But can Tesla really meet these price targets? To find out, keep watching. Prior to the massive production standstill at its Shanghai factory in May, the stock had experienced a considerable decline. This was brought on by issues obtaining parts for its electric cars, which created a number of challenges at the production. By mid-May, Tesla intended to bring production back to pre-lockdown levels, but at that point, the factory was barely producing 200 cars. In response to the matter, Musk stated that while he is optimistic that Tesla will be able to build a record number of electric cars for the remainder of the year, there is no assurance that government regulations won't be increased and that he may not have complete control over the matter. Similarly, the announcement that Musk had sold Tesla stock in August of this year caused the price of the stock to drop even more. During his recent trial on Twitter, the CEO of Tesla sold 7.92 million shares of the business, valued at around $6.88 billion. It is impossible to predict what the future will bring, even though Musk subsequently revealed that he is done selling Tesla stock. Investors anticipated that the stock would soar after occasions such as Tesla's Battery Day, even in the middle of market turbulence. In 2020, the carmaker organized the event to showcase its most recent advancements in battery technology. Tesla revealed plans to create a million-mile battery that could power an electric vehicle for the whole of its existence. It is anticipated that the 4680 cells will increase productivity and lower production costs for Tesla. Experts also disclosed that Tesla would be able to cut the price of its existing Model Y battery in half by utilizing larger cells and a dry coat electrode technique. With this expanded variety of batteries, the automaker, which is already leading the industry in the use of lithium-ion batteries in electric cars, may be able to produce highly regarded EVs considerably more effectively than any other company on the market. By the time the automaker's cells reach $100 per kilowatt-hour, electric automobiles may be on level with vehicles powered by internal combustion engines. But following this incident, the stock price didn't rise significantly. Similarly, when the U.S. car rental giant Hertz revealed that it would be purchasing a significant 100,000 Tesla Model 3 cars, supporters of the firm similarly anticipated a spike in its stock price, which did occur, albeit briefly. By the end of 2022, the rental firm plans to accept deliveries of 100,000 Model 3s. Additionally, it plans to expand its fleet of electric vehicles by adding Tesla Model Ys. Hertz also struck an agreement to provide Uber drivers with 50,000 Tesla electric cars earlier this year. the firm has been expanding its fleet of Tesla automobiles, which may help increase Tesla's appeal and attract new users. Despite the fact that Tesla's stock price only slightly increased following this acquisition, a number of other causes and initiatives could cause the stock price to climb in the upcoming months. Musk stated that releasing fresh upgrades for the FSD function is one of Tesla's primary goals for the remainder of the year, and this is probably going to happen. Tesla published FSD Beta 10.69 earlier this year. It has a number of noteworthy enhancements over the prior version. Shortly later, the automaker launched a new version, 10.691, that included more capabilities as well. That's not all, though. Tesla is scheduled to release FSD Beta 10.692 in September, according to a tweet from Elon Musk. He clarified that although there would be a lot less code changes in this next and maybe last release, they still need to be polished and will have a big impact on the driving experience. I believe that the advanced driver assistance software will be enhanced. Tesla also intends to provide the updated FSD beta version to each and every one of its 100,000 testers. According to Musk, the cost of Tesla's FSD beta software in North America is $15,000, which is $3,000 more than it was before. How do you feel about this? Tell us in the comments below. Tesla has been working to increase the output of its 4680 batteries ever since Battery Day in 2020. This is an attempt to meet the 20 million EV target by 2030 and enhance the next generation of automobiles. Undoubtedly, Tesla has been encountering some difficulties with this. According to experts, Tesla is just halfway there when it comes to properly launching its 4680 cells, and the company is having trouble growing its dry coat electrode process. Nonetheless, the electric vehicle manufacturer persists in accomplishing its objective of employing larger cells for its vehicles, and reports suggest that specialists will likely be able to carry out the 4680 cells dry coat electrode procedure in 2019 as well. In related news, it appears that the automaker is finally moving past its junk bond rating and into the blue chip category. Even after amassing a cash position of over $18 billion, and generating high delivery profits for more than 2 years running, rating agencies like S&P Global Ratings and Moody's Investors Service continue to classify Tesla as a junk bond. That, though, appears to be fading into the past. According to Joel Levington, a credit analyst at Bloomberg Intelligence, Tesla is still making a significant amount of money, which will eventually compel these rating agencies to take action. He went on to say that he wouldn't be shocked if Tesla's investment grade was raised before the year is out. It goes without saying that for the sixth most valuable corporation in the world, this is a little overdue. For the typical Tesla investor, it might not seem like much of a difference, but for huge funds, which frequently have policies prohibiting them from investing in firms with ratings lower than investment grade, it could matter a lot. Having a higher grade will enable Tesla to draw in these bigger investments, which might have significant implications for the carmaker. Additionally, Tesla is anticipated to unveil a number of intriguing enhancements and updates at its second AI Day later this year. During last year's AI Day, Tesla introduced its Dojo supercomputer, claiming it to be the fastest AI training device ever created. In addition, the business showed Optimus, a completely bipedal human robot, which intrigued a number of Tesla investors about what to expect from this new technology. Tesla hopes to provide an update on the Optimus project during its second AI Day later in September, despite the project's announcement last year. Originally, August 19th of this year, exactly 1 year after the inaugural AI Day, was set aside for this event. Musk, however, later declared that the event had been rescheduled for September 30th, citing Tesla's intention to make a functioning prototype of the Optimus robot available by the end of September. Tesla can significantly boost its revenue now that its humanoid robot is available for public distribution. The anticipated update on Tesla's sales and deliveries for the third quarter is probably going to help the company's stock price even further. The Wall Street consensus before the company's Q2 earnings were made public was $16.521 billion in revenue and $1.81 per share in earnings. This was because to the Shanghai Gigafactory's fourth closure, which led to roughly 250,000 deliveries as opposed to the much higher than planned 300,000. Fortunately, despite the challenging quarter, Tesla's financial report for the quarter exceeded forecasts on both profitability and revenue. With revenues of $16.934 billion, the company beat Wall Street's estimates by nearly $400 million. It also announced $2.27 earnings per share. Given that Tesla managed to weather the worst quarter of the year, the majority of Tesla supporters are upbeat about what will occur in the third quarter of this year.